when you're going through the absolute most miserable times in your life, it's very hard to even imagine it. But maybe in 5, 6, 7 years, when you look back at those times, they're actually these amazing pivot points in your life, and you grow so much as a person.
Welcome to Multifamily Insights. I'm your host, John Casman, and I'm excited for another great episode. Listen, if you are enjoying the show, getting some great value, and stepping up your knowledge bank for your investing needs, I need you to do me a quick little favor and leave us that rating and review. It helps other people understand how much value you're getting from this show, but also allows them to find it. We got to help out that algorithm. And listen, if you haven't done so, or this is your first time listening, be sure to hit that follow or subscribe button, especially if you're getting some great value from today's guest. With that said, I want to welcome on our show today. We've got a great one, Mr. Lawrence Dunning. They say you're the average of the 5 people you spend the most time with. So if you want to grow as a multifamily investor, you have to spend more time with other multifamily investors. And an easy way to do that is to join our apartment investing mastermind group today. Just go to casmancapital.com and click on the mastermind button. Now, as a part of this group, you'll get access to expert trainings, group coaching calls, industry news and updates, as well as all of our webinars and workshops, including our 3-hour workshop on raising capital. Again, if you want to be around other multifamily investors that can help you scale your portfolio today and grow your network, make sure you're a part of the Apartment Investing Mastermind. Just go to casmancapital.com and click on the mastermind button today. After 5 years of focusing his life around MMA fighting, he trained overseas in Thailand and other places to become a better fighter. After some soul searching and trying to figure out his next step, he eventually decided to try on real estate. He partnered with his friend and ultimately developed as a real estate broker and investor. Now he became a top 1% Chicago agent for the last 6 years. And he's now focused on growing a team and expanding into Northern Indiana. Let's welcome to the show, Lawrence Dunning.
John, so great to be here, and I'm looking forward to our conversation.
Absolutely. Lawrence, I breezed through some of your background, man, but you've got a really extensive and interesting background. Why don't you take 2 minutes and give us a little bit more context?
So I started out of college. I got a really good job in finance. They sent me to Holland, and then New York, and then Chicago, and then I made them all this money, and I got to keep just a fraction of it. So I thought, well, this isn't great. So me and an older friend set up our own trading company. I did really well in my 20s, and then I took basically a 5 year sabbatical when I was fighting and just enjoying life and pursuing personal goals. And I made every financial mistake you could make, and it was also through the 2009 crash. And the only smart thing I did in that time was I bought a big commercial property. And it was such an interesting thing because I had an MBA in finance. I was a big reader, but I didn't take one class on real estate investing. It's like this, almost like the secret of the uber wealthy, that a lot of people, especially in traditional finance, you don't even talk about that. So then when I was trying to decide, I always thought when I left trading, I can just walk back on the trading floor and keep making all this money. I didn't realize that the years I was away, high frequency trading came in, and the local Chicago pit trading groups that kind of didn't really exist anymore. So when I was trying to figure out what to do, I thought, well, I've got this building. It was the only thing that saved me. It was the only smart financial decision that I made during those years. So I thought that there's got to be something here. And then I just went all in into learning about real estate investing. I partnered with a developer on some rehabs. My best friend was an attorney at the time, and he was like, I hate being an attorney. I'm gonna set up my own real estate company. You'd kill it with your English accent in America. So like it was all these different things. So I changed my whole life into real estate about 8 years ago. And it was a little humbling, John, because in my first year, just as a broker helping people, they saw me as this trader slash wealthy playboy when I was young. And I wasn't very good at self-promotion and marketing myself, didn't have that much business. I was still kind of learning. It was a very humbling time. And then every year was just growth and more business and learning more and meeting more connections. And now I look back, it's so funny. As you get older, you look back at these pivotal moments. And I always think that that career change and kind of humbling in my mid-30s was the best thing for me in terms of me as the human. So it's such a good lesson that I always like to share with people is when you're going through the absolute most miserable times in your life, it's very hard to even imagine it. But maybe in 5, 6, 7 years, when you look back at those times, they're actually these amazing pivot points in your life, and you grow so much as a person. So I always find that so refreshing. That it puts a really nice positive lens on the the crappy moments of your life.
I'm glad you said that because it's always hard when you're in that moment, right? Like when you're in the moment, you don't want to hear all that. Oh, you're gonna look back and be like, oh, I'm so grateful for that moment of struggle. So
Yeah.
it's tough when you're in that. I remember, we were at a down point in our not just real estate, but just life. I mean, my job situation was in flux. Family dynamics were taking a hit, right? At some flip projects that were just completely going sideways. And I remember I hired this coach and he told me, oh, you're failing forward. And I was like, what? He's like, oh, yeah, you're failing forward. It just sounded like crap to me. I'm like, dude, man, if you don't get out of here with that wax. But there's a lot of truth to it, right? It's like when you try something, even if it doesn't work out well, you'll learn from that experience, you gain more confidence, and you just really learn to attack whatever challenge pops up, as opposed to building up anxiety about what could potentially happen, or maybe it never happened. So I love the fact that you struggled and went through that, but came out on top. Let's go back though, because I think there's something very interesting in your dynamic, right? You talked about having an MBA, in finance and going to these great schools and, having a great job that sent you to different places. But also you got this fighter background, right? I mean, you trained in MMA and other things here. I mean, talk about kind of that duality of who you are at your core and how did training kind of, fuel you throughout your journey here.
Well, John, you said something before we started recording, which was it was a compliment on, if someone's been in martial arts for 3 decades, it obviously says something about their character, their persistence, their grit, their discipline, their determination. And there's the other side of that coin is now I'm in my mid 40s and I'm a dad, and I think back at again, talking about pivotal moments in my life. If there's one thing that I would take that's been the biggest blessing, it's been the martial art journey. I think it's given me so much. And it wasn't that I was a kid that was bullied or anything. I used to, growing up in the 80s, I'd watch these movies with these larger than life characters like Jean-Claude Van Damme. And I realized that if you want to be a force of good, you have to have strength. And so I was like, I wanted that strength. And what I was chasing was the physical dominance, the physical prowess. But what I didn't understand is the mental strength. And in the 30 plus years I've been training and competing and fighting, and the reason that I was going to the gym has changed so much. So now when I go, it's a source of seeing some of my closest friends, the camaraderie aspect. It's almost like a social club of gentlemen savages, and especially jiu-jitsu. Jiu-jitsu really appeals to the intellectual people. But it's I go there, it's my church, it's my Zen place, it's my break from the stress of life. And I think it's so important as you get older is to have a place that's just for you. So, we're both dads and we both work and we both have podcasts, and you get so busy that you forget to take time for you. And I think you can only be the best professional, the best husband, the best father if you take time for yourself. And I think martial arts has given me so much, from confidence to just being a place and a thing for me to always pursue. And lastly, I actually the idea of the growth mindset. People talk a lot about that. Um, when you do something that's difficult and over time you get better at it, it's just such a positive imprint of that philosophy that, hey, if I put work in something, I can get better at something. And they talk a lot when I was trading, they talk a lot about when most people start trading, you lose money, and that's just part of the game. But it's not really a loss. It's like you're paying your dues of real estate of um, trading school, and it's the same with real estate. Yeah, I really like what you said about failing forward, because when I first started working with developers, I had a really bad partnership and the guy screwed me over and there was lawsuits and lost money. And for a long time, it got me down. And anyone that's been in lawsuits knows that the only good thing is the attorneys. They're awful. And the best thing that I've been thinking about that is I've learned so much about partnerships that I realized, if in any venture in the rest of my life, if someone comes to me with an idea or some kind of joint partnership in anything, the first thing I'm going to think about is not, do I think this thing will be profitable? It's, do I want to see this guy's name on my phone late at night? Do I want to troubleshoot problems with him and over dinner? Like, do I want to have this person, his energy? Do I want to see his name popping up on my phone and feel excited to talk to him? And that personal aspect, if I had known that before, that would have saved me countless losses from this guy. Because I always had this feeling in my subconscious that something was off, but everything was right on paper. And it's like, trust your gut. So sorry, and I'm kind of rambling, but I'm so passionate about spreading some of these messages, because when you learn the hard way, these are priceless lessons. And again, talking about just lenses of seeing the world, um, I think about my son who's 3.5, and I think, man, if I hadn't gone through all these struggles, when he's having problems when he's older, how am I going to give him advice? If I'd had an easy life and I just bought $1,000 of Bitcoin when it was at 10 cents and I was a Bitcoin multi-billionaire and I've never done anything for the last decade, but sit around and enjoy life, I'm not going to be able to be useful to my son. So it's just these ways of reframing, I guess, you know the difficult parts and the tough times when you're really learning you can put a positive spin on it. And I feel like I guess I'm rambling, but that's just I love spreading that message.
No, man, I love the message, and I think too your point there that jumps out is when you talked about partnerships, right? And failing forward, and you had that partnership, there was always that feeling, something was off. And it's hard to put those things into words, right? I wish I could give people a checklist to say, okay, make sure you do this, right? But we've gone through similar things, man. And as a matter of fact, I had a contractor, two different contractors actually, where boy, I got, took to the ringer. But I had to go back, and it's easy to blame those individuals, right? But that doesn't really help me take more control and ownership over the things I could control. So what I had to do was reflect back and say, okay, what was it about them that I knew was off, didn't recognize that to put in writing or to identify it properly so that I don't make this mistake again in the future. And you asked some very poignant questions, simple questions, but I think still important, right? Hey, if this guy calls me at 11 o'clock at night, what's my reaction going to be? Am I going to be, oh my goodness, this guy running off? Or, hey, is this just a little issue we got to talk through, right? Is this somebody who I'd want to bring around my family? Is this somebody who I want to go have lunch with? Is this somebody who I trust implicitly? Like those are the kind of things to help you gauge, okay, and if the answer is no, now you can dig deeper and say, well, why? There's something off with this individual. And we have to have that radar because we're trying to build with people. And sometimes people don't have the same intentions that we have. And you have to recognize that. And unfortunately, when it comes to real estate, it is a bit of the wild, wild west as far as, regulations and who you partner with and all that kind of stuff. So you do have to be somewhat protective of who you let into your space and who you partner with and who you give money to. But the more you can ask better questions, trust that gut feeling, but also put a little definition behind that gut feeling and start to ask more pointed questions, I think the better you're going to be to find opportunities, grow and scale your business. Let's talk about what you're doing now, right? So we talked about you growing as one of the top agents in Chicago over the last 6 or 7 years. We also talked a little bit, or I don't think we mentioned it yet, but you do have a background. You're starting to build your own portfolio as a multifamily investor. Talk to us about, what it takes to build your background in the as an agent, as well as starting to bring your own investments to the table.
So with being an agent, you have to really, I think, in order to have success, you have to find a niche. And it was just such a natural niche for me because I was already an investor, I have a background in finances. I start helping investors, and then I develop all these relationship with builders and rehabbers and get things before they hit the market. So it's been this wonderful kind of growth in the last few years of just working with investors from all over the country, looking just to get yield. And traditionally in the Midwest, you have pretty strong cap rates, and so we get a lot of people from the East Coast, from the West Coast, from Texas, from all over, as well as local investors that are just looking to buy investment property. And that's been great. But I always think if you're in real estate and you're not taking advantage of all the connections you have and the insider knowledge and investing yourself, it's kind of a waste. So I've been investing since 2013, from commercial properties, residential, different areas. I actually just finished. I got my first Airbnb up and running in the town of Cedar Lake, Indiana, where I live. That's been fun. That's an area I've never ever had Airbnb tenants. I've been just had my second one, so it's been literally 4 or 5 days of being open. And it's trying to just learn, constantly learning and taking advantage of, even if the greater market has a slowdown, you're always going to have these different pockets that are going to do very well, and just trying to identify those pockets in Chicago. And Chicago's it hits the news a lot for bad crime rates, and it has pretty tough taxes. It has a lot of challenges. But having said that, you can do so well here. There's so much opportunity in Chicago. So I feel like I'm so lucky that of all the places that I ended up in my career before real estate, I ended up in a place where historic cap rates are high and you have investors all over the country looking to invest in Chicago. So I guess I'm very lucky that I didn't end up in a place where investors weren't looking to invest.
Yeah, I mean, Chicago certainly has its issues, right? Some challenges there, but it's still the third largest city in the country. It is in the Midwest. It is, more accessible than many of the other cities. So there's a lot to like about that market. You mentioned that you get investors from all over the country, East Coast investors, West Coast investors, who are looking to park capital and invest in the Midwest. When you get these phone calls, I imagine some folks have preconceived notions. What's the most common question you get from those out of market investors?
I think it's the confidence that it's going to be managed properly. I think the key, looking back at um, different businesses, like if you want to go really heavy into rehabbing and you get all these outside investors and you start all these projects, you have to look at what's the weakest link. It's going to be probably the the honesty of the GC. Like that's probably the weakest link. And I think when you're at a state, and a lot of these guys will buy something and they don't even see it. Sometimes they do FaceTime walkthroughs, sometimes they'll fly in for the inspection, but it's just having the confidence that there's going to be someone on the ground that's going to be doing a good job. And property management as a business is I've been through so many property managers over the years, and I think it's an incredibly difficult, low margin business. And there's a lot of people that I don't think do a great job. And it's very hard as an owner because for the longest time, I was actually managing my own properties. I had over 20 units I was managing, as well as my day job, as well as competing in jiu-jitsu, as well as trying to have a family, like all these different things. And I realized that just because I can manage my own properties better doesn't mean I should do it. You could walk into a McDonald's and I'm sure you could clean the floor better than the janitor, but that's not what you're aspiring to do. So getting a good property manager, I think, is the key for anyone looking to invest in real estate, whether you're local or out of state, because most people's the value of their time is worth more than they're going to pay to a property manager. So I think it's a very efficient use of time, but just finding the right one is so difficult. And I have a couple that I work with who I think they're the best there is, but there's still complaints. I still have clients become friends that call me and they vent about certain things, and it's like, listen, like it's a low margin business. You're not going to get the same services you get from me, where I'll pick up my phone on a Tuesday at 9:30 and chat to you about something because I'm a nice guy. So I think just that confidence that someone's got boots on the ground and they can screen tenants properly and they can deal with issues. I think that's the biggest fear for people.
Yeah, you talk about the main question you get from those out of market investors is around the team, right? So that
Yes.
GC has the potential to be the weakest link. So you got to make sure you get the right person there, but also that on-site property manager. You also said something I want to come back to, which is this quote, just because you can do it better doesn't mean you should. I think that's great. We're going to come back to that in a moment. Let's go back to the on-site team. If you're not in that local market, what advice would you give someone, whether it's in Chicago or a different market? If you're investing in an out of state market, what advice would you give someone to identify and build the right on-site team?
I always feel like it's kind of a funny answer, but I feel like you need someone like me, a local me, who's like they've been doing it a long time. They have a lot of connections and they can get you in touch with the right people because that there's that phrase, your network is your net worth. I think it's the same with investing. It's like I'm very good at knowing what I don't know. One of my strengths is knowing my weaknesses, I guess you could say. So I have the right people for every different aspect of it. And so you just need someone who's going to be honest and he's going to have those connections. So I think anyone that does a lot of business probably has a lot of connections. And then talking that feeling that we talked about the gut feeling a little bit. You got to think about what that is. The gut feeling is basically the sum of all the things you've heard, thought about, read, seen, and it's all just kind of in your subconscious. So I think if you just talk to a couple of people, you normally have. I used to think when I was young, I was so like vigorously scientific based, and I thought anyone that talked about energy and things like that, I was like, kind of rolled my eyes. But now I'm older, I realize like what is energy? Energy is that feeling you get, and it's your subconscious in relation to someone else's subconscious. And immediately before we started recording, we were just chatting a bit. I had a warm feeling to you. I like your energy, what you're about. And I'd listened to some of your show episodes before, and you seem like a good guy. But that energy that's real. And so I think if you're looking to put a lot of money somewhere, even if it's on a phone call, I think you can tell pretty quickly how you feel about people. Ask a couple of questions, see how they respond. So I think don't discount that as a lot of time in the multifamily space, people are all about numbers and spreadsheets. And I see these properties all the time where, these incredible, insane cap rates. And I know offhand, straight away, I know that they're never going to collect that because the area it's in, they're going to have all these vacancies and issues and lawsuits and all this and that. And it's so don't be too, I think the whole multifamily market is a little bit too shifted on the spreadsheets. I think you need to think a little bit more about the other stuff.
Man, I love what you just said, not just because you gave me a compliment about our energy, but you talked about just really understanding that when it comes to analyzing these deals, it's more than numbers. And I know it all comes back to the numbers, but behind those numbers are people, right?
Mm,
There's residents, there's contractors, there's property managers, there's real issues. And I just spoke at an event last week. And as a part of the event, we took a look at a deal that one of my clients was looking to acquire. And right away, I saw some huge issues. The property is only 50% occupied. They thought they could push rents up to around $1,600. But what they didn't call out was the median income for the area was only around $16,000. So I'm like, there's no way they don't have enough money to pay this kind of
mm,
rent. So there are a lot of issues there that we were able to uncover. But if you're just looking at spreadsheets, it's harder to find that because you don't know the story you're looking for. So if you can understand what's really happening, it actually becomes a little easier. The thing you said though about my question on how to find that if you're out of state and you're looking to build out your team, you want to have someone local that you can trust. And ideally someone who is that connector, a broker, another investor, somebody who, isn't looking to take your business right away. And another way that we like to do that, and we advise people, is to always look for referrals. So when you're talking to brokers, for instance, ask those brokers what property management companies they like. Who would you refer for this kind of a property? And when you're talking to property management companies, ask them about different contractors. Go ask them about different vendors. And when you're asking these individuals for their connections or their thoughts on other folks, see which names come up frequently.
mm,
Because when you hear those names come up over and over, that lets you know, okay, they've built a good reputation in this area, right? Some people trust them or like them. I should at least have a conversation with them. The other thing I would do, and I got this straight from Ashley Wilson, who was a guest on the show, and she spoke at my conference a couple years ago. She said something I just think was so brilliant. I was almost mad at myself for not thinking of it myself, right? But she said, one of the best referrals you can get is asking the person who relies on the person in front of them. So if you want to find a really great, drywall guy, ask a painter, right? That
mm,
painter who knows who's really good at drywalling because they're the ones who have to go in and paint right after, right? So they're going to tell you, oh yeah, this guy's great. They're going to know the guys who screw up or don't do it right. So if you could think about who relies on the person right in front of them, that person's recommendation is going to be fire because they're going to give you people that they absolutely know have done a great job. So just a great little tidbit there, but I love your thoughts there for helping those out of state investors. Let's talk a little bit more about what you look for in the market. You'd mentioned a little bit about your Airbnb property out in Cedar Lake. When you look at the market and opportunities, what kind of deals are you looking for today?
That's such a great question. A lot of people buying today, they need to be realistic. And investor rates, they were up as high as 8.25, 8.5. They're down a little bit now, but most things are not going to look good right now on a spreadsheet with these rates. But you have to be thinking. There's that saying, you marry the building, but you're only dating the interest rates. When rates come down, which they will, fundamentally we live in a tech-driven world, which is deflationary. So I think, and all the metrics show the inflation numbers are coming down. When the rates do go down, I don't see a world in which property prices don't go up. I don't think a huge amount, but I think they're going to be a little bit higher. They're going to creep up a bit. So anything you buy now, you have to just expect in whether it's going to be 6 months, 12 months, 14 months. When you can refinance it, not only is suddenly your numbers going to look a lot better on a cash flow basis, and but also I think you'll be sitting on a bit of equity. I think prices will go up a little bit. So just try and be realistic. So what I always tell people as well is if someone calls me and they're like, I've got this much money, what do you recommend? And I send them the absolute best off-market building that I know that has better returns than other stuff that I'm seeing selling. If you just don't have things to compare it to, it doesn't really mean a lot. So you have to see a few areas, you have to see a few options, to realize what a good one is. But I think in my market, there's just certain areas where there's one area called West Woodlawn has the most new construction development in all of Chicago. It also has about 30% of it that's just vacant lots. So it's ripe for development. You have a lot of city programs that are pushing infrastructure development. You have a lot of personal developers that are moving from other areas of the city that are investing there. So right now the cap rates are good, but I don't see a world in which you have tens of millions of dollars being invested in place that doesn't get better and have upside appreciation. So it's like you're finding these little pockets in in a state where maybe the prices in the Midwest. The thing about the Midwest that people like is you have, East Coast and West Coast, they have these explosive increases. And then Austin, we just saw had a huge pullback because it had gone up so much during COVID and everyone was moving there. We don't really have that. It's slow and steady here. Things are just creeping up. It's a bit easier to navigate. But I don't see a world in which when you have millions of dollars of people's investment money going into, you're not going to see some kind of appreciation. So it's trying to be realistic with the cash flow that you can expect to get today, and also set yourself up to be in a good place when you can refinance rates. But in terms of like me personally, I've been setting comps for a long time. I remember the first building that I bought in um, the residential building, my first building was commercial, was 2016. And I remember it appraised $250,000 under what I was trying to buy it for because there was just nothing in that area. We were kind of early. They were comparing really bad areas of Chicago with this really good area, Pilsen at the time, that's exploded. And the same when even going all the way back to this Airbnb, um, there's no Airbnb comps, anything like it. But I was talking to my wife and I'm like, I think there's a niche here. And it's been up, I got the professional photos a week ago and it's already fully booked the next couple of months. So it's just trying to find opportunities and going back to trusting your gut, because that takes a lot of confidence. I wish my younger self had the confidence to listen to my gut. I didn't. I've overridden it numerous times with my intellect and been wrong. So it's trying to trust your gut with where you see opportunity. I think that there's always opportunity. It doesn't matter the market.
Let's talk about your book. You wrote this book, The Forgotten Asset Class, and you mentioned that, through all your schooling, all your education, getting your MBA in finance, you really weren't taught about real estate. What sparked you to write this book, and what can listeners get if they were to go check this out?
Oh, thank you for the plug. Honestly, I had so many people for the last 9, 10 years say to me, hey, I want to learn a bit, because they hear me talking about, the business model of real estate investing and how you get money from all these different ways. And they'd always say, hey, do you have a good recommendation to read? And I've read a lot, and I've read a lot of books on real estate and real estate investing, but there hasn't been one like easy, relatively quick, simple read where it talks about some of the things that I'm passionate about. So for the longest time, I always had that imposter syndrome where, and this was a subconscious, I didn't even realize this, but I always thought, why would I do something when I could just get it from someone who knows more than me? And then I would see people that I knew weren't very knowledgeable giving these multifamily seminars and doing things like that. And I'm like, I know them personally. I know they don't do much business. I know they don't know too much. And yet they're giving lectures and they're talking about it. And so I thought, well, I'll just write my own book that I want to give people. So that's what it is. It's I wrote it with a really good friend of mine, Brad. He's um he that talks about a bit more the technical aspect of analyzing property and running cap rates and things like that. For me, it's about my journey through not just the intellectual knowledge of why real estate is such a powerful tool, but it's also trying to. I think there's an intersection between health, happiness, good financial habits, and making smart decisions that your future self thanks you for. And so that's really what I'm passionate about. Is you don't have to be a full-time multifamily investor, but if you're wealthy and you make good money, just having one building is going to offset so much of your taxes. You're going to save so much money that way. Or if you're really heavy weighted into stocks or crypto, getting a building it's just adding a very safe and stable revenue stream that's going to have all these tax benefits, going to have the upside appreciation. You're going to have leverage to your loan. It's such a smart financial decision. So I feel like almost everybody that gets to a certain age where they start to accumulate assets, they would do very well from multifamily. And then there's also the other side of the coin is the message that I'm so passionate and I feel like I shout it from the rooftops is you can do everything right, but without having real assets, inflation is just eating away the value of what you make. And my heart goes out to these people that, these young families where they work multiple jobs and they don't have any assets and the rent keeps going up and the grocery bill keeps going up. And since 2020, we've seen such a massive influx of money into the money supply that it's caused real assets to go up a lot. So even though I said earlier we live in a deflationary world, which we do because tech is deflationary, it seems like it's going to be the future policy for the next few administrations, I'd imagine, is just to keep trying to do programs and just keep inflating the money supply that assets are going to keep appreciating. So I think it's very smart for everybody to have some assets, and you doesn't have, I talk about real estate as a tool because I called it the forgotten asset class because they didn't teach one class when took my MBA. They didn't teach me one real estate class. But it's like, I know some people do really well on the secondhand Rolex market. There's people that are killing it on precious art, which has gone up more than the S&P. Nvidia stocks on fire. I've got friends that are killing it with Nvidia. So like there's different avenues. Just protect yourself. So if you're young, the more you can sacrifice now and put it into assets, the more that I think your future self is gonna be really thankful. So I talk a lot about stuff like that, and just the meaning of money to buy back your time to do the things you want to do. Because you and I are both dads, that if we can do something that buys back our time, we can work on our own schedule so we can spend more time with our kids. I think that's really important too. So there's so many. I love the philosophy of money and the philosophy of freedom and the philosophy of real estate investing. I think is really powerful.
Lawrence, I love everything you said. And when you started talking about um, real assets are required to fight inflation, I just think that it's so important because for guys who are in this space, it makes sense, right? For the women, the guys who are in the space, like it kind of becomes almost, natural or innate. But if you haven't invested, if you don't own assets, if you're like most Americans, you're hard worker, got your W-2 job. I don't care how much money you make. You're making good money though in this job. If you are not acquiring assets, you are losing. And I didn't understand it for a while. And I read Rich Dad Poor Dad, and I got it conceptually, but it really didn't click until the first time I sat and created kind of a personal financial statement. And when they don't allow you to, list your personal residence as an asset. So you literally lay out your assets and your liabilities, and you start to understand that this is almost like, I don't want to call it a game, but you literally have got these pieces here, these assets that you can leverage whenever you want. Hey, okay, I want to pay for this, or I want to do that, or I want to do this. That's what you have left over. If your job goes away, what you have are the things that you've acquired. So when you get to retirement, when you get to, what you could pass on to your children, because you can't pass on that six-figure job. You don't get to make your kid, president of marketing or whatever it is, right? You don't get to do that. Like they got to go and earn that for themselves, unless it's a business. But again, that business is an asset. I know there's a lot of talk about nepotism right now, but the truth of the matter is those are the things you get to pass along to your children, or assets, whether it's a business, real estate, Rolexes, whatever it is. So we all have to focus more on acquiring assets, and there are ways of doing that which are simple and proven over a long period of time, and there are ways that are newer and maybe a little bit more complex, but ultimately acquiring assets sets you up for real wealth creation. So I appreciate you sharing that. Again, if folks want to check out your book, we'll make sure we link to both your LinkedIn and your Instagram. Folks can follow you at Lawrence Dunning. We'll make sure we put a link to that in our show notes there. But Lawrence, I really appreciate you sharing that information. And that book, again, is called The Forgotten Asset Class. Right now, we're going to transition and go to our round of insights. Lawrence, give me a failure or an apparent failure that sets you up for later success.
I think not planning ahead when I left the trading floor was a huge failure. But I'm so glad because I feel like I had to hit an early kind of midlife crisis to really think about what I want to do and have the courage to be a complete beginner in something again. So I think that the failure of restarting at the time seems harsh, but I think it's so good for your character and just as a human, just to be humbled and be a beginner at something when you're a bit older in life. I think it's really good for your character.
Give me a digital or mobile resource you recommend for your business.
That's a good question. I would say read a little bit outside of your niche. So, for instance, a lot of people that are just reading articles on real estate, I think start reading economic articles. There's a few really good publications. The Pomp newsletter, Ansi Pompliano is really good. There's a few others, but just trying to read about economics, and even Pomp talks a lot about Bitcoin too. But I think you get a really good picture that's going to help you with your real estate investing. So I think trying to read a little bit, trying to get sites that are a bit outside your specialty will really help you.
Speaking of reading, what's the book you've recommended or gifted the most in the last year?
Oh man, I've given so many books. That's such a tough question. Um, I'll give you two recommendations. One is a long novel called The Fountainhead by Ayn Rand, and it's a philosophical novel, and it's a little slow to get started, and it's a big book. But I promise you, if you take the time, it starts a little slow. If you take the time and you read that cover to cover, it will change your life for the better. I can say that gave me the courage to set up my own trading company, which gave me financial freedom to follow my dreams. So that I've given that to a lot of people. But it's a long book, and more recently I've been giving shorter books to people. I won't recommend my own book, but check it out if you want to learn about real estate investing. I'll say Gary Keller's The One Thing. So this was so unusual because a good friend of mine who's an attorney, he's not a real estate guy, recommended The One Thing by Gary Keller. And some of you listeners might know Gary Keller's a real estate guru. He's written a lot of books on real estate investing. It was complete coincidence, but he talked about just being focused in where you want to be. And if you want to achieve, I believe in balance for life to be happy, but you're going to go through periods of imbalance when you're really focused on different things. And I think he gives a really good, he talks a lot about setting the right goals, having one day goals so you don't have midlife crises. It's a very, very good book. So I recommend that to everybody.
Excellent books there. Give me a daily habit that helps you stay focused on your goals.
I'm very rigid from the martial arts. I'm very disciplined in the sense that I know it. Like today, it's a Friday. I know I'm going to be at the jiu-jitsu gym later tonight. I know I was going to get in the cold plunge before we had this conversation. It just I think you should have your non-negotiables, and you just tell yourself I'm going to do these, and you just do them. And I would say for me personally, that getting a cold plunge in my basement has been incredible. I got it for my body because I know it's really good for inflammation and just waking up and getting yourself alert. But the mental aspect of just being something about going in cold water for a few minutes and then coming out, you feel better mentally for hours. It's been the most surprisingly positive effect on my mood that ever. But I would say for most people, especially people that are entrepreneurs, they're in the multifamily space, spend a bit more time on your health, and I think your future self will be very grateful.
Give me your number one insight for investing out of state.
Don't be lazy with your research. So really do a lot of research and have an idea of what you want, and then it's going to be much easier to find it. And that's the first step I get with a lot of people when they call me. They don't even know what they want. And I can't help people unless they know what they want. And there's no perfect building. Some people have much more appetite for risk. Some people want a much more stable place in a much better area with less returns. So you have to figure out what you want, and then do a bit more research, and then try to find someone who you have good energy with, who has the experience and the connections, who's going to help you.
All right, let's lighten the mood. You are in Cedar Lake, so just outside of Chicago. Give me your favorite place to grab a bite to eat.
It's called the Lighthouse. It's a little steakhouse on the lake here. It's beautiful. You see the sun setting in the evening, and it's such a change from eating at. Chicago has some of the best restaurants in the world. Definitely, if you're visiting Chicago, you're going to be very happy with the culinary choices. But there's something about location, just being on a little lake in Northwest Indiana and seeing the sun go down. It makes the food taste much better.
I love it, man. We'll have to check that out. We get up to Chicago pretty frequently still, or at least fairly regularly, I should say. So we'll make sure we check that out next time when we're passing through. But great information, Lawrence. Really enjoyed our conversation today. Hearing about your background in martial arts, professionally, more in finance, and then transitioning into real estate as an agent, but also as an investor, and talking about the thing you didn't learn, through that MBA. And that was about investing in the forgotten asset class and focusing on real estate. How to invest out of market. You talked to us about, really understanding how to trust your gut, asking better questions, and ultimately being able to build the relationships that can allow you to scale and build that portfolio. Again, for folks who want to learn more, we will put a link to your Instagram and LinkedIn in our show notes, and they can check out your book, The Forgotten Asset Class. they can check out your book, The Forgotten Asset Class. Lawrence, thanks again for being a great guest and coming on Multifamily Insights. We look forward to staying in touch with you, and I hope you have a great day.